back. It gets to here, that's about 38%. Gets to here, that's 50%. Gets to here, 61.8%. And then if it gets all the way back up to our original purple line, well, it is evaporated, or it's moved back 100%, or the entire move downward has now gone all the way back up. That is why these numbers, if you have a downward sloping Fibonacci, are drawn this way. Now, the Fibonacci sequence, the reason why traders are taking a look at these 23, 38, 50, which is more of kind of a Dow theory number, or the 61.8, is generally accepted thought process from technicians is if you've had a downward trend and you still want this downward trend to be intact, well, if it retraces by more than this 61.8, you kind of have to admit defeat and say, you know what, this downtrend is perhaps no longer intact. Maybe this downtrend has a different characteristic. Maybe we're already starting an uptrend moving forward. Now, the luxury of hindsight, does that always work? No, not necessarily, but it's something that some traders are looking at. And you can see in this down sequence, after it hit this 61.8, it really gapped up higher. After it retraced the entire move, it then, of course, continued higher as well, albeit had a little bit of consternation here. So that is a downward sloping Fibonacci retracement, and the way to go ahead and draw that. Now, if you click on this, you can modify, you can add different values. This is what is referred to as Fibonacci extensions. Maybe you wanted to see, okay, what is the 138.2 move? You can add that value, pardon me, and it's going to go ahead and actually then have a move up higher. That's kind of a Fibonacci extension or retracement extension, which we're observing. Is it ironic that it maybe had a little bit of resistance on that extension before being able to move higher? Maybe it is. That's for you to determine. If this is helping you make decisions, then by all means, you feel free to incorporate it or add it. Now, the luxury of Fidelity.com, which I'll move over to and try to use a very similar example, is this. If we look at more recent price action here of SPY, same symbol, the way that we would draw this is coming to the draw functionality. By clicking on draw, we have the Fibonacci retracement. It's actually kind of spelled out for us. Very similar, kind of cascading lines. Under draw, we click once to go ahead and engage this. Here, I'm going to go ahead, same thought process, take a look at the top. And now I'm clicking once to engage and pulling it all the way to the bottom. Now, this looks a little bit different. Although we're still starting from the top at our 100%, and then it works its way down to 0. I'm trying to capture what was this peak to valley here. Now, what this has done for us is it's actually added some of these Fibonacci extensions, like that 138.2. You can see up above the 168.1 is there, and then down below even, out of that 0 line, maybe an extension lower also. So the Fibonacci tool on Fidelity's website on Chart Plus will actually go ahead and add some of those Fibonacci extensions without you having to do that for yourself. And of course, if you back this out or manipulate the chart, you can get a little bit different of a view as to what we're referring to, or potential areas of importance for you if you're looking for this to continue. Well, maybe 138.2 is something you want to take note of, maybe up at 161.8, completely up to you, but that's just a little bit of the differentiation on the Chart Plus version and retracement tool versus Fid.com. Another question I had specifically about Chart Plus was being able to try to find average true range under indicators. What we can do is actually type this in. So freehand, if you're having a hard time finding something either in averages or bands or kind of where is this, one, you can search alphabetically, or two, if you were to type in, let's just say ATR and see what that pulls up. Well, it has average true range dash ATR. You could probably also type in average or true or range, and that should go ahead and have something that populates for us. Now, I was notified just recently, average true range percent, which I think you were showing in Active Trader Pro Chase, don't believe has been incorporated into Fidelity.com Chart Plus quite yet. I'd venture to say it's something that's probably not too far off the beaten path, but it's not quite here yet. For those of you interested in the difference between average true range or average true range percent, average true range is putting this number for us in nominal terms, whereas the percent is putting it in those relative percentage terms. So that's just something to try to keep in mind there. One other quick hit that I wanted to cover about these indicators, maybe you are a little bit less comfortable with drawing the indicators for yourself, some of these classic chart patterns or retracements. A question had come up about yesterday in the Chart Plus version. I had shown one way to come to events, and under events, what I had demonstrated was indicators. And if you click indicators, or if you were to click on classic for classic patterns, short term, there's oscillating indicators as well. What you can do is notice in the background, different kind of dots or icons will appear. And if you click on that icon, what it will do is actually go ahead and then add that, mostly education, if I could get my mouse cursor to kind of stick on it, but it will go ahead and actually add the indicator for you. This is what I refer to as letting the computer do the heavy lifting for you. You don't necessarily have to add the 21 period moving average to know that price had a crossover. You can just kind of have this algorithm running in the background if you would like, and you'd be able to go ahead and click on that dot in order to then have that indicator added to your chart. If we clicked on this other, well, here it's actually the 50 period moving average. So what we're noticing is that the price is crossing up above not only a pretty quick moving 21 period moving average, also the 50 as well. Some traders, I'm sure, are looking at the 21. Some traders, I'm sure, are looking at the 50. Completely up to you. But if you didn't have the 21 or you didn't have the 50 on your chart, or maybe the 200 or 100, whatever it might be, being able to have this events kind of running in the background, or being able to turn it on or off would allow you to go ahead and actually kind of have this, doing lots of that work for you. So wanted to go ahead and show that in fid.com. Real quick, Chase, and then I'll turn it over to you. If you are utilizing Active Trader Pro, very similar functionality there as well. If you come up to technical analysis, patterns and events, once again, technical analysis, patterns and events, there are different active events. We were looking at the indicators selection here. You could look at oscillators. I know we were kind of looking at all these the other day, Chase. And if you click on apply, it's going to be scanning for all of those in the background. And then down below in this understudy, we'll see the different types of either bullish or bearish indicators that you can learn more about or add to your chart. I know there's a question about moving average crossovers, which we can look at. Maybe you wanted to learn more about it. Well, here you go. You can learn more about this pattern or event. This is going to be education from Recognia. They're going to, and you can also click on add to chart, which I will do. I'll keep it brief, folks. You can take a look, but the thought process is being able to get a quick description and learn further education, consider some things, also different things that would invalidate this trade from a different source other than Fidelity specifically. And same thing when you click on add to chart, this is an understudy type of indicator as it's called, but same song and dance. It's going to go ahead and create that indicator for you and also look to draw attention towards what it was referring to. Here we see that the MACD line is crossing from below up and above its signal line, which is a moving average, and then actually crossing up and over that zero line as well. So that's one way to not only learn about it, but also have all of these different types of indicators or patterns kind of scanned for you, and then be able to try to interpret them for yourself. All right, Chase, I know there's a lot more that are coming through. We're about at that halfway mark. So want to turn it over to you if you've got some more, and we'll try to keep on knocking out as many as we can.
Yeah, sounds good, Peter. Tons of good questions so far. So we had a question that came through from Robert, similar to what you're just mentioning. So I'll piggyback on it right now. The question was on Amazon. Robert was using a screener on fidelity.com and noticed that under the classic patterns and technical event screen criteria, Amazon came up with a particular symmetrical continuation triangle, aka bullish type pattern. So Robert was saying, hey, how do we find that here on Chart Plus? You kind of already showed us, Peter, but just to call this one out specifically, you want to go to events. And then in this case, we're going to click on the classics, the classic patterns and events that are provided to us typically by Recognia. In this case, Robert, you get those icons that Peter was talking about. And if you just left click on this once, it's going to identify the pattern, whatever it might be. So this is what they're calling the symmetrical triangle. Now, of course, these are tools and algorithms and systems. Is this really symmetrical? Maybe, maybe not. I think most traders would probably not initially see it that way, but from their system to identify it here. And what they do is they give you a sort of rectangle, a zone of expectation of price movement based upon the range of the initiating pattern. Very, very common, where someone says, hey, we take the height or the distance between the highest and lowest point within the initiation of a pattern. And then from the breakout, we then extend that into the future to formulate a price expectation. So, Robert, that's how you go ahead and do it. Again, it's events, in this case, classic. And then once it pops up, you just have a dot. And if we go back in time, for example, we can click on this one. It's going to add some of this consolidation with a breakout pattern as well. So very, very sweet tool, especially again, if you're newer to trading or technical analysis in general, you might understand the concepts, but just not trust yourself enough to do the identification aspect of it. And that's okay. That's why we partner with these third parties. They do most of that hard work for you. And then it's up to you to manage risk if and or when you're placing those trades. Now, a few other questions that came through as well. When someone is looking at, let's say, Chart Plus or ATP, what are some of the more commonly utilized technical indicators or things to focus on? Definitely a wise question. When we teach technical analysis, a lot of the principles that we're teaching are from and established and developed from the CMT program, the Chartered Market Technician. And their teachings and their thoughts and kind of the culmination of the technical analysis or technician industry is that trend is first and foremost. Because if you're not trading with the trend, then everything's going to work against you from there. So what I would encourage a newer trader is as you're looking to maybe add indicators, whether it's again on Chart Plus or ATP, think to yourself, well, what do I want to start with? Maybe some trend analysis. I can use something in here, move forward. What's a very common trend indicator that we see personally or anecdotally with clients? Peter showed us a simple moving average. If I go back to my ATP for just a moment here, there's a reason that we have this indicators tab with just a bunch of different simple moving averages. It gives us, the trader, a way to define and a proxy of a variety of trends. So without getting too far into the technical analysis concepts themselves, what I would simply say is if you're brand new and you're trying to figure out, do I do Bollinger Bands for volatility, RSI for momentum, or do I do MACD for a little bit of momentum and trend, or, where am I going here? Most technicians, when they first start off, if you're really trying to follow the approach of technical analysis, would be to start with trend first. And then you add those other momentum, volume, volatility studies to supplement your analysis, if that makes sense. Now, does it have to be an SMA versus an EMA? That's where it comes down to the personal trader's choice. But I did just want to point that out real quickly there. Okay, another question that stands out here. We had a question that talked about some of these indicators where if we were setting them up for a moment, is there a way to get some of those pivot point arrows? So let me go to a daily chart just to get this nice and clean. We'll go to a 6-month. And there's an indicator here. If I click type to search, if I type in HILO, this gives us the pivot points high and low. Now, what this will do for us, as we can see here, gives us a red and a green arrow. Now, one of the ways I find this to be a little bit easier for folks to see at home is if we just change the color of this chart for now. We can see the red and the green. So this is identifying what this is looking at. It's a 5 candle or 5 period to say, hey, within those 5 periods, where's the highest candle until the next low, till the next high, et cetera, et cetera. So that's a pretty easy way that we can think about this. The shorter the number, the more of these little arrows you're going to get. The longer the number, the less. So if we go ahead and we hit 10 period, notice that we're only getting really these major pivot points identified. Now, this is still historical. There's nothing futuristic about it. It's not looking into the future. It's looking at historical data and saying, hey, based upon these candles left and right, where's that pivot point? Now, why do we use this? Well, if you're a beginner trader or even advanced, doesn't really matter where you are in your journey. What's very commonly done is to simply connect these pivot points. And those arrows make it relatively apparent to the trader. So if we take a look at the bottom end, we take a look at the top end here, it might look something like this to start. Now notice current pricing is that highest pivot point. So with each day, if we continue to rally, for example, this will continue to update through time. But that's one of the reasons that a trader might use it, is just to simply identify those pivots. This becomes pretty apparent, again, not to pick on the Russell too much, but if you're looking at an area that has a lot of consolidation, you can start to line up some of these levels together. So for example, notice all these different pivots. And again, they may not be quite exactly on top of each other, but we can see it's pretty close, right? It's kind of close enough, if you will. All those reds in a kind of zone, and then all these greens in a zone. Then you've got all the volatility in between. So again, that's how you add that. And that's maybe why a trader may use them, is simply just to more easily identify from a historical perspective where those major pivot points have been. Okay, so we had a question from Mark. Can you show how to draw an envelope channel around a price range? So I'm probably going to address that in a few different ways. And Peter, I'd be curious on your response too. The way I think about a channel and how I would draw that is using this rectangle tool, right? So just like I showed, for example, there's a range where support and resistance may not be to the penny, but it might be close enough. That's one way that we can do this here. If we take a look at a different security, let's pick on Apple, right? We could go ahead and draw this. And if you don't want to use, let's say, the rectangle, we could use something like, let's say, a diamond. Okay, so if I start to draw this, it gives me 4 points or 4 corners, if you will, that I can tug on to reshape this. So as I work through here, it takes a little bit of extra time, but you could even shade your own channel this way with a diamond tool, right? And of course, as time goes on, if you get the breakout, it's going to be outside of it. As you get new pricing, you may have to redraw this if necessary for your analysis. But that's probably how I would draw or shade a channel around a price range. Peter, is there a different way that you would do this? Because initially my thought was almost like a regression channel. So if I go to, if I can find it, I apologize, linear regression channel. Thank you. If I click on this and I draw it, and then let me remove this, it's a similar kind of tool. What this is doing is finding a best fit linear regression line based upon the data, and it's drawing a range to the high and the low based upon it. It's not shaded necessarily. Is there a different way that you'd approach that, Peter? I'm just curious for my own sake.
No, as far as shading, that's what I've typically done as well. Sometimes the pattern manipulation's a bit tougher, but I think either that diamond pattern that you had used or the regression channel is what I do. The thing I really wish, because I use regression channels quite a bit, I wish that when you thickened up or modified that line, that that kind of the rails, as they're called, or either side of that channel would also thicken. When you make that thicker, what it does is it thickens up the actual linear regression line, but doesn't do those lines on the outside. And I really wish that it did. You can kind of see what I'm referring to there. But that'd really be the only thought that I've left as feedback for quite some time. But you can see where I stand on the totem pole, or maybe I'm the only person in the Fidelity universe that would like to see that. But I think you're right on par.
Got it.
Go ahead.
Sorry about that, Peter. We did get a question a little bit earlier. I think it was from Joyce, maybe somebody else, about maybe adding indicators to indicators. I did briefly talk about that during the webinar, so I'll show that real quickly here. Let me clean this chart up. Let's go to this one. I know it's titled intraday, but of course we'll make this work for our own purposes. We'll go to a daily chart for now, 3 months. That's perfectly fine. We'll get rid of volume. And what Joyce was bringing up very specifically was RSI, the relative strength index. And what we do to this indicator itself is many things. So in fact, we'll go through the whole process real quickly here, folks. What we do on the desk very commonly is we'll add RSI to start. We'll go ahead and modify this little bubble. I typically change the line color just so I have that taken care of here. And then from here, we'll leave everything as it is, except for the opacity. We'll turn this up quite a bit. The reason being is once we're extended at any point in time, it's going to highlight that difference for us. Okay. Next thing we do is we go to indicators, and we're going to add, guess what? RSI once again. So here's a second RSI. So this is going to overlay the first one. Now, when we do this, I'm going to modify the second RSI, and I'm going to change my overbought and oversold levels specifically to be 50 for both. And you'll see why we do this in just a moment. Again, I'll change my line color to black. The overbought color will change to green, oversold to red. Now, the idea here being is if I add a little bit of opacity, now we get this shading effect, if you will. All right, we'll make it 50%. There we go. So the idea here, Joyce, and for everybody else, is when we're looking at this indicator, rather than trying to use the traditional overbought signal of RSI going up and above 70 and then crossing back down beneath as a signal, as a mechanical exit, if you will, or waiting for it to cross below 30 and come back up, we're almost using it as a gauge of just overall momentum if it's in the bullish or the bearish kind of camp. Like, hey, how much green do we see? Well, over here we see some, but how about in this price action? Almost none. And when we do, does it last? Nope. Does it get very far away above that 50 neutral zone? Nope. How about now? Well, now we can see that the tides have changed from a momentum perspective, confirming price. So that's the first way you might customize, in this case, RSI. Again, it's a little bit involved, but you have two layers of RSI kind of on top of each other with the colors. And personally, I just think it looks nice. Now, what Joyce is bringing up, though, is we can then go to the RSI and we can add an indicator. So if I do this, I can now add a simple moving average of the RSI line. The idea here being is we're just simply smoothing out the ups and the downs of the momentum kind of oscillations, if you will. Now, why might we do this? Again, it's kind of similar to the reason that we might have a simple moving average on price, is that we can see that there's these ups and these lows, these valleys, these peaks, these troughs, et cetera, et cetera. But notice how there's a lot of red here and momentum is beneath its own average line. But then as we start to get up higher, we're seeing less red while momentum's now above its own average and starts to almost use that average as levels of support. And notice how it starts to curl in. So a trader might look at this and say, okay, I've got price action. We're starting to move up higher and we're breaking out of this, let's say, initial downwards trend, right? Like, oh, we kind of peaked above it once, false breakout. Oh, second breakout, retest. Things are starting to change. Momentum is less bearish than it was because the red has kind of disappeared, if you will, and the average of momentum is going up. And so we get this preponderance of evidence approach that we talk about where, yes, we're looking at price action. What is that doing first and foremost? What's the trend? Is the trend improving? Is it becoming more bullish, bearish? And then what is that full picture of momentum? Not just 70-30, but is it just increasing through time? Is it above its average? And you can start to kind of weave together an entire picture. So that's just one example, Joyce, and everybody else, of why you might add a simple moving average to an indicator like RSI. Very, very common for us to use it on something like average true range as well. Here's average true range percentage, which for now is specific only to Active Trader Pro, like Peter had mentioned. But if I go back down to the bubble, I click add indicator, simple moving average. Now, again, we're just averaging all those oscillations of historical volatility of this stock through time, in this case, Apple, right? So that's all that we're trying to do. That's why a trader might do it. Just make their signals either more clear to them or just a different way to view the evidence being presented. Peter, other questions for you as well? I'm going through the list. There's still a lot in here. I'm trying my best to go through chronologically if
Yeah,
possible.
no, that's great. I think there are definitely a handful. So I think that's what I wanted to do, was maybe even piggyback off of kind of what you are alluding to here and now, to try to knock out a few of these simultaneously. I'm glad that you answered that one for Joyce, so that takes one off of my plate, although I would have been happy to answer it as well. What I wanted to do was to actually come over to a few questions. There was one about MACD. There was another about RSI. There was another about actually being able to package all this together. And I think that is what is extremely interesting and important. So let me start over on Active Trader Pro. If I get my ducks in a row here. All right, let's see, just a moment. That should be showing up. James was asking, and I know a few others were, kind of the thought process or theme of maybe a moving average crossover strategy combined with different indicators, maybe from intermediate term perspective, that works more often than not. James, that's a tough one. And who else? Someone else asked about that as well. when it comes to, back testing, Capitalize AI, something that we have access to. I know Jake on the team will do sessions there or different webinars with them from time to time. They've got some great back testing. There's a number of books out there about back testing as well. But at least the theme of your question, I think, let's stick with that. Maybe a moving average crossover system, and then maybe incorporating other indicators, which Chase was talking to. I'll try to talk to this for maybe just 3-4 minutes, maybe push 5. But if we take a look at what I have added here, a couple different exponential moving averages, a 12 and a 26. Now, the reason for that is you can have a 12 and a 26 period moving average, and you can look for the crossovers of them. Meaning, if we look at just price, and I say crossover, what I mean is, did price cross over said moving average? Well, you can also looking at, did a moving average cross over a different moving average? That's what a moving average crossover system is. Well, that is also what the moving average convergence divergence will do, which is called MACD. And that's why I had the 12 and 26. So let's go ahead and take this a step further and think, okay, well, I can have the MACD on my chart, and that's going to tell me if there's been a crossover or not. And that would be identified by the MACD line going above or below this kind of 0 line. And that could also be drawn if you want. For those that want to learn more about MACD, I certainly encourage that. But since it's exaggerated here towards the high side on a stock like NVIDIA, I just want to go ahead and kind of thicken up this line. When we talk about MACD, we mean, is this red line up above this black line? That means that the moving average on the short side is higher than the more intermediate. And if it is below, that means that the crossover has happened to the downside. A signal would come into play a couple different ways. One, when this signal line, which is maroon, crosses up above, or excuse me, when the MACD line crosses up above the signal, or when it comes from underneath up above 0 as well. So moving average, convergence, divergence, we've got different technical analysis classes that go further in that. But the theme is, if you're starting to see that the faster moving average is crossing up above the slower moving average, maybe that is a signal that you want to take mind of. Maybe also just looking at, if we zoom in here to the most recent 6 months, maybe you just want to look at also, what's the trend doing? Like Chase had said, well, if we see that we have successfully lower lows and lower highs, well, that's a shorter term or maybe intermediate downtrend that we're contending with. Counter trend is tough, but we're beginning to get an early signal that maybe these moving averages are looking to actually cross over towards the higher side. We want to react to what we're seeing and not try to front run a pattern or something of that nature. So on top of incorporating some concept of a trend line that begins to break, we got to really be confirming that it gets back under that trend line and then tries to break again right when we're seeing that we're getting the moving average signal as well. And then if you were to add another indicator on top of that, maybe like momentum, well, back on that 6-month basis, Chase already walked us through RSI. If we're seeing that RSI was kind of down in the dumps and oversold, but then begins to at least hold its own, maybe at this 40 line or maybe at this 50 line, and then push higher, it's not just necessarily about one moving average crossover, not just about a broken trend line that may be showing signs of pushing higher, incorporating some gauge of perhaps momentum. It's not just about all these signals coming together, because it can still be a false signal. What you need is for these to continue to improve, meaning that your MACD continues moving higher, meaning that price action itself moves higher and makes a higher high and potentially a higher low than you had seen in the past. And if all those things are coming together, you better believe the calculation for momentum is more than likely also moving higher as well. The cautionary tale here, and I'll leave it at this, is the reason that we want to kind of reserve the right to look for opportunities and maybe green shoots through a number of different gauges of price action, volume, momentum, volatility, whatever it's going to be, but also keep our heads on a swivel in case situation changes, is look over here towards the left-hand side of the chart. There were a few of those scenarios that look somewhat similar. We're kind of breaking a downtrend. We've got a moving average crossover. Momentum looks great, but then it doesn't hold, which is why you do want to be able to look for opportunities, but if the opportunity begins to do an about face or turn on you, or you're seeing that said indicator, said trend line, said crossover, said momentum is breaking down, potentially that's an opportunity that no longer is looking that kind of robust, and you maybe need to kind of pare your position down, do some risk management. Here, that system might have chopped you up a little bit, but then you can see when this actually did get off into the races, we moved from 500 all the way up to 900. Is this example common? I would say in the tens of thousands of charts I've looked at, not necessarily, but this is why we do it as traders, right? We're looking for kind of a confluence of indicators that all lead to an opportunity that maybe is going to go ahead and pay off and kind of outweigh the times that those opportunities were kind of all for naught. That's a minute longer than I wanted, Chase. I just wanted to at least just show when we're thinking about indicators or systems, I don't think that it just has to be one, although I'll admit I'm a big fan of trying to keep it simple. But if you can just try to take a look at the foundation of what is trend doing, and is that maybe beginning to change? Or what are the moving averages, another gauge of trend telling me? What is the momentum maybe behind that trend? And then just price action itself. I think that you'll be well on your way to being able to have a system that you'll be able to look for opportunities that been more times than not look pretty obvious about when you need to manage risk. All right, sorry, Chase. I know we're strapped for time here.
No,
I'll let
all
you go
good.
ahead and take a few minutes here.
Yeah, so Peter, here's my plan. There's still a bunch of questions left that are worthwhile answering. So I'm going to make sure they all get answered. If I have to stay 5 minutes over, no problem with me, folks. If you don't mind staying just a few minutes over time, I would definitely appreciate it. Let's get to these questions as best as possible. Peter, if you do have any other prior engagements or appointments, obviously you got to do what you got to do. No worries there whatsoever. Okay. Lightning round. I'm going to go pretty quickly here. Robert asking, hey, can you just recover the RSI features one more time? Yeah, absolutely. So the first RSI that we add, all that I changed here was the opacity for the extreme levels of 70 and 30 to make them that darker color. That's all I did to the first RSI, really not much. The second RSI that we add, that's where we make the change. In modification here, the overbought and the oversold level for this one specifically, the way I've set it up here, Robert, is I put it 50-50 for both. What that essentially does is it gives us a constant midpoint line. So anything above that is light green. Anything below is that light red. Okay, so 50-50 on the second one for RSI. Okay, so I'm going to start just from top to bottom. We kind of did skip around a little bit to the questions that we could most easily answer. Let's go all the way through. NG, will ATP in the future or currently support custom scripting such as C+ or Pine in a future release? I'm not 100% sure. Peter, if you happen to know, let me know. Feel free to cut in. I don't think so. I know that's something they've looked at. The current version, no. But the future version, Peter and myself are able to sort of demo, test the beta version of what they're working for. I haven't seen that, but to be honest, I haven't asked. NG, if I get more response, I did copy and paste your comment into a chat that we have with some of the people working on the kind of newer version. If I get any feedback, I will let you know for sure. Okay, Monica was saying how to check the price range chart under the option, please. I'm not 100% clear in that one, Peter. Let me know if you had a different interpretation. My thought, Monica, to your question was maybe how can you see price history of an option contract itself? If that is the case, then let me know. Clarify in the Q&A. We'll do our best to circle back and answer it for you. If I use NVIDIA, I go to whatever expiration. I'm just going to choose a random one. If I click on the hamburger icon, that's what we call it. Although, Peter, like I was saying the other day, a client calls it a stack of pancakes. I like that too. It works. Click on this, and then you click chart specifically. And Monica, this will pull up a chart of the options price, the executions through time historically. This wouldn't really be used for technical analysis in any way, as it is a derivative. But if you just wanted to say, hey, I got an execution, how did my execution go relative to maybe others in the past? You could take a look. I'll do my best to scroll through the comments real quick and just make sure that was the intent of your question. If it wasn't, please let us know. Moving forward, Anonymous having a couple of different questions. I couldn't tell if it's the same person or if there's multiple people going by Anonymous, so I apologize if I can't give credit where credit is due. The question was simply asking, is there a plan to maybe unify Fidelity ATP versus Fid.com? Why do we use those separately? What is the advantage, disadvantage? I saw a couple of different questions like that, Peter, which is basically, why should I care, or why do we use either or? Do I have to? So I'll answer it this way. They're different tools for different purposes, especially when they were first developed. So a couple years, so I've been here for 7 years. Peter, you've been here for what, 14, twice as long as me, I think, right? So coming up maybe on 15 years. When Fidelity.com was developed, it really wasn't for trading necessarily. It was really more for investments, right? We're called Fidelity Investments, not Fidelity Trading. So I think first and foremost, our DNA is in the investment realm. And of course, over the years, we've adapted, sort of really engaged with the trading community by offering different platforms. So Fid.com, I think, was first and foremost more investment related. And through time, we've developed it for some trading capability. ATP from the ground up was meant to be a trader's platform. In terms of like combining them, I totally get that. The reason that we're making some of these updates, like for example, Chart Plus has those newer indicators that ATP maybe doesn't just yet. I don't claim to be a technology expert. I'm not a developer. I don't know code, all that stuff. But the way it's been explained to me, not as any kind of excuse, but just rationale, is that it's easier to make updates in the kinds of code and the kinds of script that we use for the website than it is with ATP itself. So the idea is we're kind of rolling out these features on Fid.com first, getting user feedback, preference, what do we do right, what do we do wrong, whatever. And that is all then going to be included in the next gen ATP from the start, fresh, super ironed out, if you will. So for a trader, which one do you use? If you're more of an investor who just happens to look at some stuff for trading, then I think that Chart Plus is going to be just fine within the Fidelity.com website. But if you like the customization, right? Like this RSI on RSI with an SMA on RSI, plus you can have that next to 4 other charts simultaneously, that's going to be ATP, simply put. So if you like the control and the customizability, that's the big keyword I can think of, Peter, then ATP is the way to go. There's no real downside to either one, though. Again, at the end of the day, you're totally welcome to choose which one you want. Peter, what are your thoughts on that? Like, how do you approach that when it comes to Fid.com versus ATP? Just real quickly, curious on your thoughts.
I think in short, it's what you had said, the customizability. We sometimes have the luxury of, being home, working from home all the time. Numerous clients that I would talk to very often were on the road. They were traveling quite a bit. And maybe you did not have your home computer where you've got Active Trader Pro downloaded. Maybe you have to use some other form of communication or avenue in order to go ahead and get the job done, which is why having access to Fidelity.com, the Fidelity app, as the worst case scenario, which I hate to say it like that, but Fidelity.com, pretty much feeling confident in the different avenues. I kind of just the short story. You want to, in a pinch, at least know your bearings, right? You ever try to kind of walk through a room in the dark? I can do it now, backwards, forwards, and in the dark completely because I've lived at my house for 7 years. I've done it a number of times. You certainly don't want to, especially when you need to be placing a trade, learning it for the first time. I think that's why we try to show, hey, if you're more comfortable on Fidelity.com, here's your bread and butter. You probably have a pretty solid foundation. Here's maybe a few other tools or ways to accomplish what you're looking for. But also, hey, by the way, very simply, something Fid.com really can't do is what you had said, having multiple charts pulled up. My every single day use case for Active Trader Pro, I've got 3 different charts set up with different time frames on the same symbol, and then I can jump back and forth between numerous layouts that help me get the job done. So I think, as with anything, depending on the job or task at hand, you want to know what tool to rely on in order to more efficiently get that taken care of, which is why we don't want to make you seem like, oh, we'll do it this way, but also do it this way, do it this way, do it that way. See the pros and cons or benefits and drawbacks of both, and then it's dealer's choice. Whatever you really think helps you get the job done is why we want to try to show both avenues.
Yeah, agreed, Peter. At the end of the day, it's like, hey, these are tools we make available to you. They're both for free. It doesn't cost you any more to use one or the other. So we just want to expose you to both, and then you decide what works for you. If someone's like, hey, ATP is just dumb, I'd rather use Fid.com. Hey, that's totally cool. We make them both available to you, just kind of whatever user preference may be. Okay, lightning round, going back to this. Christine saying, hey, under layouts, technical trends, how do we best set up the screen? So let's talk about it real quickly here in ATP. Under layouts, we use typically a blank one that we customize for demonstrative purposes, but what you're asking about here, Christine, is technical trends. I'll go ahead and open this up. When this loads, I might have to resize my ATP because of all the different tools. And I do. Okay. So how do we customize this any further? Well, what I would encourage is, first of all, is there anything you don't use? So here's a quote box where I'll type in, we'll use SPY. I think there's a few other symbols we got as well that had come through, but I'll pick on this for now. It's going to link through a whole bunch of different charts. Okay. Do you use those tools though? Like, do you ever look at the quote box? If not, get rid of it. You know, my whole thing is real estate or screen estate is very precious. Like, you're trying to make this analysis as easy as possible. If you're not using it, can it? Get rid of it. Minimize it at the very least, or close it so it's not running in the background. Once you've gotten rid of everything that you don't want anymore, now it really kind of is a custom layout. Just shift things around. And when you find yourself missing something, that's when you can go ahead and add it. One of the things I would just suggest in general is, if you ever have a question, you can go to Help, Active Trader Pro Setup, and this will establish the, what would you call it, the walkthrough or the welcome process, if you will, to kind of reset up your ATP from scratch. So there may be times where this could just be helpful to walk through. Like if I click on the technical trends layout here, right? And then I go, okay, well, here's the brief layout. If I hit next, I can do some of these other preferences if I want to. Hit next. Here's the walkthrough, good to go. However, if you're not quite sold on that, if I do custom layout, it's going to list all the different tools a la carte, and I can go through and just pick them piece by piece. So really, I guess my short answer would be, whatever you're not using, get rid of, and then anything else, keep, modified to your liking. If I switch back to the blank, of course, we'll see just whatever we had there previously. Okay, moving forward, what are the 3 to 5 indicators most long-term investors use? That's going to be subjective, Sheila. I've seen many traders use a variety of different simple moving averages, for example. You know, very commonly, like the one I talked about in the presentation yesterday, is if you're on a long-term chart, you may use something like a monthly frequency, for example. So we're going way long-term. We'll go maximum time frame. Always important to go to settings and change to logarithmic so we can look at this on an appropriate scale through time. And there's traders I've spoken to who will use an SMA, a simple moving average, for a 12 period. The idea here being is that this is a 12-month or a monthly frequency with 12 months as a 1-year rolling average, right? So this might be a version of a long-term indicator that somebody uses. But I couldn't give like a clear top 3 to 5. What I would say though is, again, from a technical thesis perspective, first and foremost is going to be trend. That part's really not subjective. That's the kind of the teachings of technical analysis. Now, which indicator you use as a proxy of trend, that's where it's up to the trader, I think, in all. Okay, now for the short-term trader, it's a very similar answer. Again, a lot of them are going to use short-term moving averages. They could use RSI, whatever it might be, MACD, volume weighted average price as an indicator. So VWAP, if anyone's ever heard of that, very commonly used by traders on the shorter term to monitor price executions against that benchmark, if you will. So a lot of different choices there. Okay, moving forward, we had another question. I use pivot point arrows often. Can the alarm be set daily, weekly, monthly when the new arrows appear? Ray, not that I'm aware of. Peter, I'm not sure if you know of it. I've never seen it. I haven't heard of that, to have the pivot points almost set an alert.
No, I have not. We didn't really get to that real-time alerts, section, but that's a great one to take a look at as well. I don't want to bog down your system because it takes a minute or two.
Yeah.
But when you had a watch list opened up, that would be kind of the next best thing for different types of indicators to be kind of scanning for you in the background. Although, as far as the pivot points is concerned, I don't know of one for that.
Yep, me neither. I'm not aware of it. I'm gonna say tentatively no. But definitely good question.
Oh, sorry, Jay. I was gonna say I've got a couple others. I've got the midday briefing, so I've probably got about another 5 minutes or so. I don't want to cut it off. Let me, if I could, Chase, jump
Hit
in,
it.
answer a handful, and then if I have to step away, to go ahead and prep for that, let you maybe knock out just these last remaining ones. I hate having to cut it short though, because there's so many
All good. I'll
that
be here, Peter.
we're getting to.
A minute. We don't leave till all the questions get answered.
Hey, there we go. Now we're getting to it. There was the question about, just on that Recognia, at least the help menu, under the technical analysis, patterns and events. That's what's going to go ahead and get this kind of cascade of different types of icons down below. I had gotten to the help. If you hover over, you can actually click on one of these little squares that pulls up. And then I had selected learn more about this pattern or event. So the process is clicking on whichever one that you are looking at. and then you can click on learn more about this pattern or event. This is simply price crossing over a 50-period moving average. So it's going to go ahead and give us that description, kind of the help menu, a bit of a visual as well, and then different considerations down below. That's a great way to consider your learning process. So one last time, on the chart, you can click it, learn about the event, or that is also how you would then add it to the chart via Active Trader Pro to see, okay, hey, look, here's a scan, 50-period moving average price is jumping up over that. Another question that came through is actually about being able to maybe see a average of price targets. There are different research reports that are available. I stayed with Johnson & Johnson just because that was another requested symbol. We spent our time on Chart Plus, but one of these other tabs that is available is Analyst Ratings. On Fidelity.com, we were talking about why use Fid.com versus ATP. These research reports are on Fid.com. They're not on Active Trader Pro. That's by design. All the information that's there, if we tried to pack that into Active Trader Pro, would bog down the system. But under Analyst Ratings, among other things, off on the right, there are research reports. These different independent investors or analysts will have different price targets. But if you come to the Refinitiv Veris report and click on the opinion date off towards the right-hand side, this is a report that will come out. And if you scroll downward, rather than just giving their own thoughts and opinions, which they do, they've got different stats and factual, ratios for the stocks themselves. Down below, usually on that second, third page, they have price targets. And the benefit of this report is that they will actually scan all of the analysts covering it. So for a 12-month price target, 22 analysts on the street right now, they've got a high, they've got a low, they've got what the mean average is. And then down below, they do that also with the earnings estimates on a quarterly and annual basis. Same thought process, 15 covering quarterly, 20 covering annual, highs, lows, what's the middle there of the mean. And they do that with a annual revenue down below as well. So that where was it? Let me scroll back over. Refinitiv Veris on the research reports under the analyst ratings tab would be the best way to look at that. Back to Active Trader Pro. This might be one of my last ones here. Question about being able to look at a couple different symbols. I actually have a tab built for this. I name it RSC for Relative Strength Comparison. If you don't have anything yet, here's how I like to have a tab that's set up, because it's built for this already. If you don't have this built out though, what you can do is under indicators, as it's saying here, please add a comparison symbol for it to work, RSC, in order to go ahead and get the relative strength comparison on your chart. But as it's saying, well, I need something to compare Johnson & Johnson to. So when you come to compare, you've got the ability to say, okay, how's Johnson & Johnson doing in comparison to, let's just say, the S&P 500? And what this will do, if you're just simply comparing it and don't even have the relative strength comparison below, it's going to go ahead and show us the blue line, which is the S&P 500 or what you're comparing it to. And then, of course, the candlesticks of what you're actually charting, which is Johnson & Johnson or this watermark in the background. The reason that some traders find relative strength comparison as a useful tool is, what if both of them are going up? Okay, Johnson & Johnson's going up, the market's going up. Okay, the point of this is, well, if we see a vast divergence, we know Johnson & Johnson's kind of lagging what we're comparing it to, but it's more in the times when both are maybe rising or when both are actually coming down, which is why this relative strength comparison is a great way to see. What this means in short is, if the purple line is heading downward, that tells us that what we are charting, Johnson & Johnson, is relatively underperforming what we are comparing it to, which is the S&P 500. You can, of course, draw trend lines here. You can add moving averages, like Chase was mentioning before, as far as adding indicators here. That's one thing traders will do. Thought process or concept here, folks, is that we always have a choice with our money, that opportunity cost on where is that dollar best served. And oftentimes that concept of trend is that something that is outperforming tends to outperform. Something that's underperforming tends to underperform. If you can maybe find something that has been underperforming and has been fallen out of grace, but then begins to do an about face, maybe investors are saying, you know what, this has been unloved for too long. I think there's value here. Once again, be careful. You never want to be catching that falling knife. Cautionary tale of those going counter trend. Usually what we're looking for is outperformance. In the case of, let's say, maybe NVIDIA for quite some time, we were looking at that one earlier. Well, the market was going up here this year to date. NVIDIA has been doing pretty well as well. And that's where we see this kind of outperformance there on that chart itself. All right, Chase, there's that 12:15. For once, I stick to a time frame that I say. But love the session. These kind of ask us anythings, these follow-ups are fantastic. Once again, we'll try to have that recording once it kind of gets approved from a compliance standpoint purpose. It'll get emailed out to those of you that joined Chase and I yesterday. But look forward to doing more of these. I'll be in that afternoon market briefing kicking off here in just the next 15 minutes or so, I think, with Matt. We will continue breaking down charts, indicators, all the above. Would love to look at some of those in particular symbols. So see everyone there. Chase, thanks for anchoring us as always, and we'll talk soon.
Awesome. Thanks, Peter. Yeah, I'm going to keep the session open, just wrap up a few final thoughts and questions here, and then I'll kick out of the room in just a moment. Thank you. All right, folks, last couple of questions real quick. If you have to go, no problem. I totally get it. Thanks for staying late here already, as it is. We did get a question about how to maybe use the help feature for anything like Recognia, for example. So in ATP on the chart itself, if you right click, I call this the forehead. You could call it the header, whatever you want, this blank space at the top of the tool. If you right click and choose the help button, this will then load a help article that's going to be sourced directly upon the tool. So when it comes to like the patterns and events or the Recognia type tools, which is going to fall under the technical analysis category, anything that we click the plus sign for is going to have some more information about it. Now, I do like to say, honestly, this is like the one helpful link that's actually like pretty good, pretty helpful. Like most websites, it's like, oh, you need help. You click on it. It's like some ridiculous article that's got really nothing inside of it. These are usually pretty good. It's going to give you some kind of information that you're going to either want within a sector. So let's go ahead and answer that question real quickly here. We're going to start on fidelity.com. Now, from here, what I've done is I've gone to news and research, and then I went to markets and sectors to start. Now, when this loads, you'll probably be on the markets tab. So we'll want to switch over to the sectors tab on that landing page. From here, what we want to do is scroll down to any sector that we're interested in to start. So for example, I'm just picking on the very top one, the first to show the communication services sector. If I click the drop-down arrow, a few things to note. It's going to tell you some of the major companies in this sector. Here's a chart of it, and that's the actual symbol for the sector, not the industry. I'm going to get to that point in just a moment. Down below, it will list the different industries right here. Okay. Some of these industries don't have a specific symbol, at least that I'm aware of. You might be able to find them somewhere. I couldn't find an answer immediately in this session, but a different way around that for you, Dan, and everybody else, is if you click this Find Investments section. So I went ahead and I clicked Stocks. So what are some stocks within this sector? That launches our stock screener, which of course you could just start there if you wanted to, no problem. But when you do that, it's already going to put a criteria for sector, industry, and sub-industry. So hopefully we can see where I'm going with this. So it's going to select the sector that we were already on that we launched this tool from, aka the communications services. From here, Dan, we can click the plus sign, and here's some of those industries. So media, entertainment, blah, 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 right? I could uncheck the ones I don't want. Let's just say I want something that's specifically within the media industry. Well, now all of these companies are within the communications services sector within the media industry. Now, if there's a sub-industry, which we're going to find out, there actually is. So under media, we've got advertising, broadcasting, cable, satellite, et cetera, et cetera. So we could actually filter this down even further to just publishing because it has the fewest results for demonstration purposes. So we can see these are just a bunch of different companies that are publishing within media, within communication services. Now it's up to us to say, okay, what do I want to look at? I'm just going to use for demonstrative purposes the top one, WLY. So we'll go back over to ATP, or again, we could take a look at a chart within Fidelity.com. No problem there whatsoever. So WLY, and then we can go to our daily chart, look at a blank chart. Here's a very long term, and here's our indicators on a daily chart. So I know it's a long workaround, but that's probably a pretty easy way to find a chart or a security or a tradable stock or ETF within a sector, an industry, and then even a sub-industry, if that allows for it. Okay. Moving forward, there was something that came through about the significance of different indicators. Yeah, I mean, there's a few main indicators that most traders use to start, mostly because they're easy to understand. Doesn't mean that they're the best per se. For example, me and Peter talk endlessly about simple moving averages. Are they the best performers when it comes to back testing? No, not necessarily. And of course, it depends on the back test and the environment that you do the back test on and the stocks you do them on as well. But they're just simple, right? Like, hey, price is above them, bullish. Price below it, bearish. Like pretty easy. Not to insult anyone's intelligence, you could probably find a 10-year-old and say, hey, is this an uptrend or a downtrend? And if they couldn't tell by the price, here's all these lines going up, they'd probably say, hey, it's in an uptrend, right? So very, very easy tool to use. The ones that we commonly teach are going to be things like RSI, Relative Strength Index, MACD, Bollinger Bands, volume weighted average price. I mean, there's hundreds, if not thousands of indicators now. Most of them are going to do the same thing or a very similar thing. The way that we teach it here at Fidelity, especially from a charting perspective, is that there's 4 pillars, maybe 5, of technical analysis. So you have price itself. So just price action, right? That's first and foremost. Then you have trend. So the trend of price, and we can use trend indicators. Then we've got momentum, aka RSI, MACD, the momentum indicator. And then we've got volume and volatility. Those are kind of the 4 or 5 pillars if you consider price itself its own pillar. All of the indicators out in the world are just going to fall into those baskets. Some use more complicated mathematics, others use more simple ones. Some try to smooth out variations better than others. But yeah, I guess my point is there's a bunch of different indicators. Find something that's super simple. If you attend our sessions, you'll see the ones that we typically talk about: RSI, momentum, indicators, some moving averages, et cetera, et cetera. Okay, going through here, I'm just looking. I think the rest of these now are just kind of comments and people saying, hey, we appreciate that, which love the feedback. Thank you for the kind words. Jordan saying, or S Jordan, are there different coaching sessions that are one-on-one? So yeah, these coaching sessions we do are typically group, but clients are able to make one-on-one appointments with us. There's a like a link that can be sent out and that clients have access to. The reason I don't talk about it all too often is just because we're so busy doing presentations like this, right? Like I've been in here for a little bit over an hour, no problem whatsoever. But we have to plan for the session, of course, do the session, after session notes, create content, research. So we don't really have a ton of time on the one-on-one stuff. So we don't do it all that often. But when it does come up, we definitely try our best to make an impact. But yeah, the reason we do these group sessions is because now we can answer a question for one trader that might actually answer that same question that 100 other people had at the same time. So we tend to just focus as best as possible in these group sessions. And that seems to be about it. Okay, there's one more here. So VWAP. So intraday, under indicators, we can search for VWAP, VWAP, volume weighted average price. Let me get rid of the simple moving average, and we'll change this color to make it a little bit easier to see. So volume weighted average price is going to be calculated at the reset of every day, which is why you see this stair step movement, is because it's going to reset intraday in a pre-market and then go through the day. Now, if you don't have pre-market trading showing, then that won't apply. So just kind of keep that in mind here when it comes to the way that we see this, this data. But the idea simply being is, what is the average price for all the executions through time for that day weighted by volume? You can think about this as a visualization of the dollar cost average of price. Okay, so if you buy 10 shares at a price and then 90 shares at a different price, well, you've got 100, but they're not equally distributed in terms of the cost, right? 90% of your trade was at this cost, so that cost itself is going to have much more weighting in your average price as shown on Fidelity.com, for example. So, yeah, very commonly used for an intraday benchmark by institutional traders to gauge the quality of their executions. A lot of traders use it for technical support and resistance on a shorter term basis. And the question, I believe, if I'm trying to answer this correctly, it says, can you show how to pull the VWAP and rotate the data to the left of the chart? I got to be honest, I'm not exactly sure what the rotate portion, maybe you mean slide. So, I mean, you can definitely slide data to the left for sure. This question comes from Anonymous. Anonymous, if you can maybe clarify that question for the group, I mean, I would definitely appreciate it. But if I'm understanding correctly, that's how you apply VWAP for sure. That's some of the concepts about it. And then, of course, you can reshape this chart however you need to slide it into the future. In terms of like flipping it or swapping it, I'm not too sure about that one. That could just be a semantics thing or maybe a wording. And then Donald's saying, what about anchored VWAP? Sure, we'll talk about it. Just because you asked, Donald, why not, right? I'm already staying over time. So let's go to fid.com. Now, again, this is coming back to that question that the group was asking, like, hey, why should I use one versus the other? And I'll be honest, they're just slightly different tools. My comment, though, that I had mentioned for those of you who had listened is that we are adding newer features to the fid.com because I've been told from all the technology experts, if anyone here is like a developer or software engineer or coder, definitely feel free to let me know in the comments, that it's just easier, I guess, to plug and play and make these updates on the website versus ATP. So I trust them. They're the experts there. So we've gone ahead and we've added anchored volume weighted average price. So if I go back to indicator library and we just search AN, it's going to pop up to the very top. The anchored volume weighted average price is using the same calculation as volume weighted average price. The difference is, as opposed to automatically starting at the beginning of every day and only being intraday, now we're looking at daily information and we get to set where that calculation starts. So that's the difference. We're anchoring, we're choosing where the calculation starts, and we're not so worried about every intraday execution. Now we're looking at daily information rolling through time. So it's a way to zoom out, but still use that same kind of concept of volume weighted average price. Very, very common to use this around like binary events such as earnings. So if I go to, I think it's, what is it, events? Yep. Click on earnings. We can now anchor this event from the earnings and say, hey, based on the almost dollar cost average of all the cumulative traders since this event, are buyers happy? Is price above it? Are buyers sad? Are the bears or bulls in control? Is it a key level of support and resistance, if you will? Sometimes the market will find these as levels of support. For example, support here kind of came close, bounced again, failed, but very quickly bounced up. So kind of a false breakout, if you will. Support again, and here we are. So why would that matter for this specific volume weighted average price? Maybe back to this earnings specifically would be, hey, if we start to curl back down, this kind of looks like a double top. Of course, we don't know until we get the confirmation. But if it rolls up, we get that almost characteristic M shape. As we start to roll down, where might a trader expect future support to kick in? It might just very well be this anchored volume weighted average price. This may be a level that traders are focusing on. We just don't know until it happens, of course. So we'll have to wait and find out. But yeah, that's the anchored volume weighted average price. It's similar to volume weighted average price, but you get to anchor it on a specific day. The subjectivity is, what day do you choose, right? Like I choose earnings in this specific case. What if you just choose a random day? That's fine. You're not wrong. It's just this information is going to be based upon that day. And the market may respect certain anchored lines more than others. Maybe not. Just depends. Okay. Let's see here. Looking through. One last question coming through from Robert. In ATP, if I add a technical indicator like volume weighted average price, what do I click to get the help explanation for that? Ooh, okay. Good question, Robert. Yeah, let's hop in to ATP. So when I say help, this is more about like a tool help, so to speak. It's not necessarily going to be indicator specific, but we do have some help for that, a little bit different way. So if you actually go up to the help in the main menu here, Robert, not to confuse anybody, I know, right? But up in here, if we go to the Learning Center, we'll get a pop-up and there is a technical indicator guide. So I would probably point you to that because this is going to be a curated, what's the word, glossary, maybe, encyclopedia of different technical indicators available on the platform. So it is alphabetized, so I'm going to guess volume weighted average price is going to be on the last page. Let's go to 3. Yep. Volume. Do we have it on here? Volume adjusted moving eye. That's not the same thing. No, it's a little bit different. So maybe they haven't updated it specifically onto this page just yet. I'll make note of it, Robert. I don't know if we have a specific article for VWAP in this. I'll have to find out. The ones I absolutely know that we have are the more traditional ones like MACD, RSI, moving averages, the money flow index. Those are going to be here. My guess being, I'm checking in real time here, so forgive me, I'm kind of going on a whim, is if I search volume weighted average price on fidelity.com, there may be an article about it. Let's see if I can find out real quickly here. Being vulnerable with everybody, trying to see if we can find this real quick. So charting with new available technical indicators is a video. Let's see, is this going to have what we're looking for? This might help a bit to a degree, so I'll share this real quickly here. So all that I did, Robert, is I searched volume weighted average price into the top right-hand corner and then clicked on the first article. And this is going to be a video just detailing some of the new indicators that we added. So we're probably going to talk a little bit more about volume weighted average price. Reading the description, this appears to be a recorded presentation that my team did, probably while I was gone on deployment, maybe before. I don't remember doing this, but yeah, it's 2022. I think I was gone for that. We'll see. I can't remember now. It all blurs together. But we do talk about volume weighted average price. So that'd be my best bet in terms of like an article or maybe a resource that we provide specific to it. Otherwise, again, you could just go on to Google or your favorite web browser, search like volume weighted average price. There's going to be a whole bunch of different articles you could source. If I had to encourage like a third party resource, I think stockcharts.com has like a chart learning center, and there's a bunch of articles on technical indicators. I think it's called stockcharts.com, if I recall correctly. Again, it is a third party unaffiliated with Fidelity Investments for all my compliance folks out there. Okay, so we're about half an hour over session. I'm not gonna lie, my mouth's a bit dry. I need a sip of water and I'm hungry, so it's lunchtime. So I'm gonna wrap up the session. I want to say thank you to everybody. I see all the comments in here. I'm gonna read them. We save them as always, so I'll go through them. I did my very best to answer every question we could that was relevant to charting. Not so much technical analysis, although I definitely think we covered that to a healthy degree today. The webinar that Peter and I did yesterday, it is going to be recorded from what I was told, assuming compliance doesn't have any issues. If I didn't mess up anything, I don't think I cursed on it or anything like that, right? No Freudian slip, so it should be good. When they do post it on the website, they typically send an email to any attendees who were registered for the event. So if you attended, you should get notification when it's made available. And then other than that, I would just encourage you to, of course, like always, go to fidelity.com/coaching to sign up for our sessions. And then as always, as I'm pulling up here for us, we've got the calendar for the sessions ahead. So one calendar is for our sessions, and then the other ones is for the earnings that are coming up for this week. Although week's pretty much done. This is from a third-party tool, Earnings Whispers, but you can take a look at that as well. So who's reporting after hours today, Applied Materials, and a few other names, although I don't know that I recognize most of them, but could be interesting nonetheless. And there's our calendar off to the side. So thank you, everybody. Really great questions. I love the interaction. These are the kind of sessions I love to be a part of. This is fantastic. So hopefully this is helpful. Good use of your time. And I will see you in the next session. Till then, take care. We'll see you, folks.